Hi everybody, my name is Nev of One Deal Away, and we're going to talk about money because it matters. So what do Paul Tudor Jones and Warren Buffett, horses, dogs, falling birds, all have in common and combined with economic forecast? That is exactly what we're going to talk about in today's video, so make sure you stay tuned in. Hi everybody and welcome. We're going to talk about a little bit about what do Warren Buffett and Paul Tudor Jones have in common. Well, aside from both being investors, very well-known investors, Buffett may be on a different side than Paul Tudor Jones, but both of them have substantial amount of cash in the markets. And of course, Warren Buffett is known as the value investor, where he's buying moats and bridges and monopolies and that kind of stuff. And the falling birds actually have a lot to do with Warren and what he's recently done, which is dumped all of his airline stocks. Now, people are arguing why he did that, and some are saying because he didn't get a head notice of what's going to happen with the airlines. Others are saying that no, what he actually shared in the 5+ hour stream of his economic forecast is the reason why, because he believes that airlines will be stuck in high unprofitability for years, maybe even decades to come, which is why he dumped them. So those are the dogs. Yes, falling birds, aka the airlines, are the dogs. Warren has decided to sit in a whole lot of cash, increasing his cash perspective or position as much as possible. Now, he's been sitting cash for forever, and basically if you watched his sort of what he sees within the economy is that it's gonna get ugly. Like really ugly. Now, he did indicate to everybody that everybody should be betting on America. Unfortunately, he's not betting on anything except for cash right now, because he's saying that the future is highly unpredictable to forecast. So he decided he's not going to be buying anything. Is he not? I really don't know. I don't have the insider information, but that is what the news are coming from him, and is basically supporting the same thing that I've been saying for a while. We are in a recession, and we are likely going to be hitting depression of biblical proportions, but you can protect yourself in a few different assets. This is where Paul Tudor Jones comes in. Make sure you research the guy so you understand exactly what he's doing and what he's holding. But he has this sort of portfolio of holdings and investments where people can actually invest in his fund, and the fund is in billions of dollars. Now, Paul Tudor Jones talked about horses. Yes, he talked about wanting to have the fastest horse in this particular financial race because the economic future is not all that bold, which is the same thing that I've been saying for a long while, y'all. If you want to benefit, there are only a few key assets, and you might likely have heard me talk about it and other people out there as well. Gold is really good because it can protect you in some of the uncertainties, and it has been an asset that's been around for I don't know, centuries. So people are liking that stuff. Now, whether it is real money or not real money, all of the money is a confidence game. Everything works only if you have confidence, if consumers and people have confidence in it. That's how fiat money works, which is like dollar, euro, yen, that kind of stuff. That's how gold works. That's how stocks work. That's how real estate works. And that is how crypto works. So when Paul Tudor Jones is talking about horses, he was talking about one particular asset, specifically an asset class and everything that is associated with it. And that is, let me see if you know the answer, y'all. It's called Bitcoin. That's right. That is the fastest horse that he is starting to bet on, and his fund, which is huge again, has put in, as he put it, a single-digit percentage into it. Now, single-digit percentage, like if you have a net worth of $100 and you put $1 towards Bitcoin, like whoop-de freaking do. But when you have billions of dollars and you take a percentage of that, then we're talking about millions, many, many, many millions of dollars that you are putting in towards an asset. And that is huge when it comes to this stuff, because this guy right here, well, he's been very much into the stocks and regularly known financial assets that have been around for a while, that everybody has been participating and everybody's hearing, and all of the retirement funds are in and so on. But he decided to kind of go a bit rogue, meaning he also evaluated Bitcoin just like me and all the other investors and early adopters of the particular new asset class that has been created, and decided to jump into it. He believes, just like me, just like many people that you might be watching and monitoring and listening, that this particular asset class has a huge, absolutely colossal way of performing incredibly well in not only preserving money, but also growing it. And as we see more people like Paul Tudor Jones start jumping into it, we will start actually seeing Bitcoin going up in price, up in value, and up in productivity of what people can do. Now, Bitcoin, if you don't know anything about it, is basically a programming language. It's a programmed currency that nobody controls. So nobody can actually go out there and say, well, we're going to create more. They can't do that because the programming language on its own, within its own paradigms, is actually controlled to produce only 21 million coins, period. We're roughly about 18 million right now, and in order to actually mine, which is the terminology used to kind of create new currency, all the way up to 21 million, it's going to take like a long time. Like super long time, because once every roughly 4 years, the amount of Bitcoin that can be mined reduces in half. We have experienced this, it's called halving, and we have experienced this only a few days ago that I am talking about it. I believe this happened on Monday and today is Wednesday. So that actually means that now, what's happening right now, that the amount of crypto that is being mined, amount of Bitcoin that is being mined, is actually reduced in half. In about 4 years or so, it's not exact number of days, it's more of number of blocks being created, that number is going to reduce yet again by 50%. That means deflation in this particular currency, and that is why people are starting to bet on it. As more people enter the market, of course, we know about supply and demand, the price actually can end up going up. And if we look at sort of the stock to flow kind of ratio and understanding kind of how that works, we can now see that the Bitcoin has a potential, very good potential, that even if it increases a small amount, that it can go from the current prices to 10, even 100x of what the current prices are. Now, this is not financial advice in any way, shape, or form. You have to do your own diligence, your own sort of investigation to find out if this is something that you want to participate in. But once you do a lot of research on how blockchain works, how Bitcoin is created, what the security measures are, I think you will come to the pretty much same conclusion that I came to, as well as Paul Tudor Jones and everybody else, that this puppy has a very strong potential to make you mad money, even if you just buy, hold, and do nothing else. Thank you for watching. I hope you've enjoyed this. If you do like this video, please give us a thumbs up, share the video, subscribe to the channel so more news and information can come your way, and make sure you tune in for the next video where I'm going to talk to you about what Bitcoin and JP Morgan have in common and the giant controversy of what they have been doing for their clients so that they can benefit. Make sure you stay tuned in for that video, because I think it's going to blow your mind, might also make you a bit angry, but it's also going to prove the point that maybe, just maybe, you investing in Bitcoin might be a good idea. Thank you for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away. I want you to be happy. Don't you want to be happy? I want to be happy.